You hear the name Warren Buffett and you just think, legend, right? I mean, how did a guy from Omaha become one of the wealthiest people on the entire planet? It wasn't some crazy complicated secret. Nope, it was a set of simple, timeless ideas. And in this explainer, we're going to pull back that curtain and decode the playbook of the Oracle himself.
Okay, so this quote right here, this is pretty much the key to everything, the absolute cornerstone of his whole philosophy. In a world that's obsessed with what's hot right now and all the market hype, he just brings it all back to one simple thing: the price you pay versus the value you actually get. If you can get your head around that one distinction, you've unlocked his entire strategy.
So you gotta ask, right, how is it even possible that a handful of simple rules can beat the smartest people on Wall Street for decades? What is the secret sauce here? Well, it's not some fancy algorithm, I can tell you that. It's a complete shift in how you think about investing, and we're gonna break it all down.
All right, let's dive into rule number 1, and trust me, it's the big one. It's all about understanding the massive difference between price and value. And for Buffett, this isn't just, a nice suggestion. It is the golden rule of buying anything.
It's the question every single investor asks. When should I buy? Is it when the market's soaring? When a stock is all over the news? For Warren Buffett, the answer to those is a hard no. His timing is based on something completely different.
So think of it like this. There are two completely different universes when it comes to investing. Over on the left, you've got market price. That's the chaotic world driven by headlines, fear, and greed. But on the right, you have intrinsic value. That's the calm, rational world based on what a business is actually fundamentally worth. Buffett lives on the right side of this slide. He ignores the noise and focuses on what he's actually getting for his money. This is so quintessentially Buffett. While everyone else is panicking and running for the hills when the market drops, he's strolling in with a shopping cart. He literally sees a market crash not as a disaster, but as a giant Black Friday sale for great companies. It's exactly what he did back in 2008, pouring billions into giants like Goldman Sachs when everyone else thought the world was ending.
So how does he actually do this? Well, it boils down to this super simple three-step dance. First, you find a great business, one that you actually understand, and one that has what he calls a moat, some kind of durable advantage that keeps competitors away. Second, you do the homework and figure out what that business is really worth. And third, and this is the hard part, you just wait. You patiently wait until the market freaks out and offers you that great business at a huge discount. That discount is your margin of safety.
Okay, so now we're getting to a principle that I'm telling you it's going to go against almost everything you've probably ever been taught about investing. You ready for this?
We've all heard it a million times, right? Don't put all your eggs in one basket. Diversification. It's preached like it's the #1 rule of safe investing. But what if I told you Warren Buffett thinks that is just terrible advice for most people? And there it is. Buffett just flips that old saying right on its head. He argues that real safety doesn't come from spreading your money thinly across dozens of companies. It comes from concentration. It's about putting your eggs in a few really well-chosen baskets and then watching those baskets like a hawk.
And to really make you feel this, he came up with this brilliant idea: the 20-slot punch card. Just imagine you get a card and it only has 20 little holes you can punch. And that's it. That's every investment you get to make for your entire life. How would that change your approach? You'd be incredibly selective, wouldn't you? You'd wait for the absolute no-brainers, the slam dunks that you are supremely confident in. That's the discipline he's talking about.
And look, this isn't just some theory he cooked up. The proof is right here in the numbers. Back in the early 80s, his company's portfolio was insanely concentrated. We're talking over 96% of their money in just a few companies. And the results? Well, they were absolutely spectacular. Returns over 100% in a single year. That's the raw power of putting your money where your conviction is.
So what's the big idea here? It's that real risk doesn't come from owning just a few things. Real risk comes from not knowing what the heck you own. By sticking to a few companies you understand inside and out, you're actually taking on way less risk than someone who owns 100 stocks they know nothing about.
We've talked about buying value, we've talked about focusing your bets, but now we're at the final piece of the puzzle, the one mindset that holds this entire playbook together. And that is, you have to think like a business owner, not a stock trader. This slide just lays it out perfectly. On one side, you've got the stock trader. Their eyes are glued to the screen, watching every little tick up and down, riding this emotional roller coaster. But then you have the business owner. They're looking at annual reports. They're thinking in terms of years, even decades. They're not playing a game. They're building something for the long haul.
And this quote, this is just so freeing, isn't it? He's basically giving you permission to ignore all the noise. Stop trying to predict the market. Stop worrying about the economy. Just focus on one thing. Is the business I own a good business? It's such a simple idea, but it's incredibly powerful.
And that's really what it's all about, isn't it? It's a total mindset shift. You stop being a gambler at the stock market casino, and you start becoming a partner in the long-term success of truly great companies. It's about turning investing from a game of chance into a story of ownership.
So, as we wrap up, I'll just leave you with this one question to think about. The next time you're ready to put your money to work, ask yourself this. Am I just buying a stock ticker, or am I buying a piece of a business? The answer to that one question could change your financial future forever.